Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, in which we take a closer look at some of the most interesting news items in the mining and exploration space. Joining me today is Neil Adshead, consultant analyst at the Commodities Discovery Fund. Neil, welcome back to Kitco.
Thanks, Paul. Yeah, good to see you again.
Likewise, always lots of interesting things to talk about, and this week is no different. I want to start with silver. The silver price has pushed through $38 per ounce, which is its highest level in 14 or 15 years, and it's even taken a peep over $39 per ounce. Many analysts now view $35 per ounce as a price floor, and that the way is clear, or no resistance, up to $50 per ounce or more. Neil, why do you think the silver price has suddenly shown a burst of life?
Well, that's an interesting question as to explain why the silver price has moved now. I mean, you could argue many other prices have moved too. You know, obviously the copper price is up, the gold price is up. Those metals, occur in similar deposits. They're probably going to be, we haven't really heard about silver yet being subject to any specific tariffs, but silver is quite an interesting commodity. You know, I talk to a lot of people in this sector and they sort of compare silver to gold, which is partly accurate. But when you actually dig into silver, especially today, the majority of silver is actually used in industrial applications. It's not necessarily used for hoarding to sort of secure your net worth. And I just looked at some stats just before we had the call because I knew you were going to mention silver. And I saw for the first time the demand from photovoltaic end uses has exceeded the demand from people who buy coins and bars. So that's quite an interesting move. And obviously we're going to see more photovoltaic demand in future. So it really is an industrial mineral, and it's really similar to copper. It's driven by the electrification of everything. And silver does conduct electricity better than copper and better than every other metal. So it's got quite a bright future from an industrial application, even though many people I speak to still sort of view it as a precious metal like gold.
Absolutely, and the Rural Symposium last week, some of the speakers were talking about silver's role in data centers because of that electrical conductivity benefit it has. Data centers are growing, which is good for copper, it's good for gold, and by all accounts, it's good for silver.
Yeah, definitely, as we're seeing with the price.
Absolutely. Okay, let's talk about gold. Gold is on the up again, and the government of Mali wants yellow metal too. It sent military helicopters to pick up about $117 million worth, US dollars worth of gold from Barrick Mining's Loulo-Gounkoto mine. That is estimated to be about 1 ton of gold that had remained in the mine's storeroom since January, when the relationship between Barrick and the military junta in Mali broke down. Barrick, meanwhile, has launched arbitration proceedings at the World Bank ICSID. Neil, other gold producers in Mali, including B2Gold, Allied Gold and Endeavour Mining, have all bowed to government pressure and renegotiated their contracts with the state. Barrick has not. Is Barrick paying the consequences of perhaps overplaying its hand? And what would you think about that situation?
I mean, it's impossible to know exactly what's going on because, I haven't been in the negotiating room with Barrick or with the other companies. Now, Barrick, has paid some money to the Malian government already. I believe they paid $83 million. And that allowed some Barrick employees to be released. And it seemed like they were on the track to, normalizing relations. But subsequently, the relationship broke down again. Barrick was not allowed to export the gold. So I think if you look at the history there, the Malian government has essentially taken, if that's the right word to use, 4 tons of gold. So probably nudging $500 million at the moment. I believe there's still 4 Barrick employees who've been detained. The mine is not operating. The mine has been taken. The control of the mine is now under a court-appointed administrator. And it's not operating, so I'm not really sure how this one is going to play out. Barrick, as you said, is in arbitration. Obviously, the relationship has deteriorated to a point where they're going to need some serious arbitration, and I'm kind of not really sure where this goes next. We've seen sort of takings like this happen in other countries, Colombia, Venezuela, etc., and it takes a very long time to be resolved. So I suppose we just have to wait and see what comes out in the news. I wish Barrick well, but the other guys with their negotiations show that you can still operate in Mali despite the government, obviously requiring a significant take from the mines. But I suspect maybe Barrick being the sort of biggest gorilla in the room, maybe the government ask was too much, and Barrick refused to bow to the pressure, and here we are. So I don't really know what's going to happen. Hope it gets resolved. It doesn't look good for Mali. It's negative for any country looking to invest additional dollars into the exploration or mining sector of Mali at the moment.
Now, as you mentioned, arbitration tribunals take years and years to hear the case, come to a decision, and then being able to exercise a decision, an award, can take another number of years, as Gold Reserve is finding related to its investments in Venezuela, which go back sort of 5-10 years. Has Barrick painted itself into a corner? It set up its shop and said, we're not going to accept the government terms, and does pride and stubbornness come into this and say, okay, we're a rock meeting an immovable object?
That's a very difficult question to answer, because obviously I've not been in the negotiating room. I mean, with a government like that, at some point you've got to stand up and say, enough's enough. Barrick still does have 4 employees they've been in a detention in Mali for at least 6 months. So it's terrible for the company, terrible for the employees and their families. Again, I don't really know how each side is digging their heels in, but it's clearly not in a great place. They do need arbitration of some kind, whether that's done through some international body, as you said, which can take years. I believe the Gold Reserve case is at least 15 years old now. And another example of that is Roger Montana in Romania. It can take a very long time. I don't know. I don't want to throw the word blackmail out there, but Barrick's already, you could argue, because with the cash payment and 4 tons of gold, they've already handed over $500 million. So at what point does the Malian government say you've paid enough? Because currently at the moment the mine's not operating, hasn't operated for over 6 months. So at some point the golden goose is going to run out of laying golden eggs, and it's just going to be sitting there as a slowly rusting plant with a 7 million ounce gold reserve on it. So it's not really benefiting anyone. Sorry, I was going to say, it's not really benefiting anyone at the moment. And Mali's taken all the gold it can. What happens next? I don't know.
Now, if I remember correctly, the operation represented about 12% of Barrick's gold production. So it is able to absorb to a certain extent that pause or that absence of production there. Interesting to see how this story develops. We mentioned B2Gold, and that company issued a feasibility study this week on its Gramalote project here in Antioquia in Colombia for an open pit and 16,500 ton per day plant to produce 177,000 ounces a year of gold at an all-in sustaining cost estimated at $985 per ounce for 13 years. The project would yield an estimated after-tax net present value of $941 million at a 5% discount rate and an internal rate of return of 22.4% with a 3.4-year payback, following an initial capital investment of $740 million at a $2,500 per ounce gold price. These improved to 1.7 billion, 33.5%, and 2.5 years at the spot gold price. Neil, B2Gold has slimmed down the Gramalote project since the prior economic study, which was done with its former partner AngloGold Ashanti, and the economics have benefited as a result. It does seem that this is a case of less can be more.
Yeah, I'd say Barrick, B2Gold is clearly looking at the amount of capex they're going to have to lay out up front there. They probably want to minimize that. Obviously, the capex bill at Goose there grew significantly. Obviously, it means a longer payback, and I think Colombia may be viewed as a little bit riskier as a jurisdiction in which to put hundreds of millions, maybe $1 billion to build a mine. So yeah, it makes sense from their perspective to just try and limit down the initial capex, make it work, and then once it's going, it's easier then to put more capital in and expand the production. So yeah.
Now you mentioned Goose.
It makes sense to me. Yeah.
You mentioned Goose, where B2 Gold's mine development team is wrapping up the build there in Nunavut. First gold was poured a matter of weeks ago. So this could be their next deployment, coming to Colombia to build out the Gramalote project. B2 Gold has been one of the best mine builders in the industry in the last 15 years. So this would potentially be a continuation of that trend.
Yeah, I mean, obviously they have a quality mine build team. Once Goose is finished, ideally corporately, you want to keep that team together. You want to get them, keep the band together, so to speak, get them on a new project. And obviously Gramalote is basically now essentially got a bow on it, assuming it can get permitted. I assume it'd be quite easy to get financed because it's B2. So it's just a matter of moving on to the next one is the ideal scenario for a quality developer like B2 Gold.
Now, Gramalote already has permits. B2 Gold said it just needs to amend them because it's changing the footprint and the location of different aspects of the plant, etc. So it needs to adjust those. It anticipates that could take up to 12 months from when it files those later this year. Talking of AngloGold Ashanti, AngloGold Ashanti is to buy junior Augusta Gold for 152 million Canadian dollars in an all-cash deal to consolidate ground around its silicon and merlin deposits in southern Nevada, which were recently renamed Arthur. AngloGold will pay $1.70 per share, which is a 28% premium for Augusta Gold. It will also pay $45 million of stockholder loans for a total purchase price of $197 million. The transaction allows AngloGold Ashanti to further consolidate its footprint around BT in the BD district by acquiring the Reward and Bullfrog deposits that Augusta had, which are adjacent to its claims in the area. AngloGold said earlier this year that the BD district hosts 19.7 million ounces of resources. This transaction will add another couple of million ounces to that. A pre-feasibility study is underway on its Merlin deposit. And the deal continues an acquisition streak by AngloGold in the region. In 2024, it bought Centamin for £1.9 billion to obtain the 400,000 ounce per year Sukari gold mine in Egypt. It's also bought other operations or other deposits in Nevada. Neil, AngloGold has been buying growth over the last few years. Why do you think so few big gold companies, are doing the same?
Obviously, every corporate development department is different, populated by different people with different skill sets, let's say. The boards are different. Some companies prefer to try and grow through exploration, either grassroots discoveries, which is obviously high risk and takes a long time, or they prefer the lower risk expansion that is possible around their own mines. So they obviously do little tuck-in acquisitions to add ounces, or they look to expand their production. But every now and then, obviously, your mines don't go forever, and you need to replenish the pipeline with either a development project or an operating mine that's got multi-year growth. And credit to Anglo, they basically backed Jeff Pontius at Corvus for many years. They basically wrote checks for him for at least 10 years, including International Tower Hill before that. So it looks like they were super smart to do this, but they were there a long time and had a lot of patience, which maybe some of the other majors don't actually stick with their trusted partners for long enough to see it through various sort of up cycles, down cycles. And credit to Anglo with this Arthur deposit now, which is looking like it's going to be plus 10 million ounce reserve at some point, and it's going to be a tier one major mine for this major mining company for the next 10, 15, 20 years. So yeah, credit to them. But different companies have different boards, different corporate development departments, different budgets, and so not all of them can do the same thing. But Anglo have proven that they are willing to take bets on big gold deposits. So yeah, good for them. It'll pay dividends longer term.
I think this is a good combination of those different aspects you mentioned. Anglo made a great discovery at Silicon, and it's pieced together a lot of M&A around that to build out its land package there. You mentioned how it was funding Corvus as well. That was obviously an instrumental part of its consolidation a year or two ago. BT is going to be a massive district in AngloGold's future. And as you said, it's looking like a tier one district. It'd be exciting to see the sort of feasibility study or the pre-feasibility study as and when that comes out to get a better idea of what it thinks it can produce from that region. When that does come out, what are you looking for, Neil?
Or you'd be looking for given the size of it and the scale, it is a large, low-grade open pit. They're probably going to focus on, moving as many tons as they can, getting as many tons through the mill and or heap leach. Probably at least 500,000 ounces a year, for at least 10 years at, say, the lower half of the cost curve. It's in a great location from an infrastructure point of view, should be from a permitting point of view, especially more so under the Trump administration. So it's a good time to be advancing a big resource project in the United States through the permitting process. I mean, it's never fast, but it's probably never not been this easy relatively easy for many years. So changes in the US permitting rules should benefit Anglo. So yeah, we're definitely going to see a tier 1 project here that's going to be one of the core assets for AngloGold for probably the remainder of my life. So probably a good 20 to 30 years.
It'll be interesting to see what the Trump impact is. About a month ago, Augusta received a letter of interest from the US Export-Import Bank to provide up to $50 million of financing under its Make More in America initiative. Be interesting to see if AngloGold looks to go a similar route and capitalize on that. Another entity that should benefit and should do well out of this is Triple Flag. The company built a portfolio of royalties in the BT district, including a 0.5 to 5.5 NSR on Augusta's Bullfrog project. It also owns a 2% NSR on AngloGold's Motherlode deposit and recently announced the acquisition of Origin royalties for $421 million, principally to obtain a 1% NSR on AngloGold Silicon. It does seem all roads are leading to BT at the moment in the US gold space. Also in the United States, Apple has taken a bite of the critical minerals bandwagon with a $500 million deal for rare earth magnetics to be produced by MP Materials, which operates the Mountain Pass mine in California. That will use recycled rare earth feedstock sourced from post-industrial and end-of-life magnets. This follows last week's announcement with MP Materials that the US Department of Defense said it would buy a majority stake in the rare earth miner for $400 million to secure a steady supply of magnet raw materials, including a 10-year offtake deal, which established a price floor of $110 per kilogram for neodymium and praseodymium materials. MP Materials shares have increased over 280% over the past year. Market cap has jumped to $9.5 billion. Neil, an amazing couple of weeks for MP, so congratulations there. What conclusions do you draw from these two deals?
I mean, this is almost unique activities that's going on here with the actual United States Department of Defense. Providing funding to a United States mining company, guaranteeing to buy their offtake for 10 years at twice the current market price. It's just remarkable. I've never really seen anything like this, especially in the United States. But we've seen signs of this before. The grants that were given to Talon for the nickel in Minnesota, and also to Perpetua with their antimony, primarily the antimony in the antimony gold deposit in Idaho. So we are seeing the U.S. military here, the Department of Defense, looking to secure these important commodities, made in America. So it's fantastic for groups that are working in the U.S. looking to either produce in the US at the moment, or develop or expand existing production. And MP Materials has been around. Well, the mine has been around a long time. I remember when Molycorp had it, and essentially went bankrupt on it roughly about 10 years ago. And here we are, $10 billion company, and it's absolutely critical to the United States military. So it's kind of fascinating how things can turn around.
As you say, what a difference a decade makes. Former operator Molycorp put the Mountain Pass mine into Chapter 11 bankruptcy protection in 2016. The current owner acquired the business in 2017. Neil, I'm going to put you on the spot. Guess how much MP Mine Operations, which became MP Materials, guess how much they bid for the mine?
I'll guess 50 million.
Oh, you're way off. Well, 20.5 million. Its market cap is now up over 47,000% from that figure. Who said industrial minerals are boring?
Yeah, no,
Okay.
amazing outcome, great timing. Yeah.
Another metal with great timing is tungsten. Tungsten darling Almonty Industries debuted on the NASDAQ this week with a market cap of almost $1 billion US dollars. It also raised more than $90 million in its IPO. On the TSX, the company's share price is up 570% over the past year. I interviewed CEO Lewis Black earlier this week, and that video is on our YouTube channel. I recommend our viewers to watch that. Neil, why is there such interest in tungsten, which until earlier this year you could perhaps say was a niche and obscure industrial metal?
I'd say it still is a niche and obscure industrial metal. It's just it's very rare, and it's very it's very valuable. It's very useful, let's say, in military applications. It's one of the hardest substances known to man. It's used it's very, very heavy. It's used in munitions. And just to give you a little story, I used to work for a hedge fund, and we were the largest shareholders of North American Tungsten, which was basically at the time the only tungsten producer in North America. It was a bit of a marginal mine. I'm going back to say 2006, 2007. Cantung in Yukon, in NWT was a bit of a marginal mine, but they also had this great deposit there, this big deposit that probably is the world's best undeveloped tungsten deposit called Mactung. And funnily enough, on the weekend, I was on the YMA tour to Yukon, and we visited Fireweed Metals. And I'm not actually promoting Fireweed Metals here, I'm just relaying it as part of the story. And we visited Mactung. So for me to actually see Mactung almost 20 years after investing in the company which owned it, was quite fascinating to see. And staying with the US Department of Defense handing out free money, so to speak, Fireweed has received roughly 15 million US dollars as part of to sort of study Mactung, to advance it. So clearly, even though the deposit's in Canada, and obviously Canada is now like the United States, the US looks around the United States and Canada and elsewhere in the Americas, and there essentially is very little tungsten. So Mactung could supply the US with tungsten for many years, because it's that significant a tungsten deposit. Admittedly, in a very remote location, it's not going to come into production next year. But it just shows the US military is looking long term at some of these strategic metals that are very important for their potential future military uses. So, yeah, tungsten still is a very niche type commodity. It's a very small market. But I believe in the whole of the Americas, there's essentially zero production today. Maybe there's a very small production in Brazil. So there's a bright future there for that deposit that eventually, subsequently, should get developed, even though it was discovered decades ago. So yeah, it's kind of an interesting time. And as you say, in Almonty, is seen as being the big tungsten listed company at the moment. Hence the $1 billion market cap. That say 5 years ago, it probably would have had a $50 million market cap. So again, market timing is quite often everything.
I guess it also throws up some interesting questions. As you mentioned, the US Department of Defense has advanced some money for the Mactung project, but also other parts of the US government are putting tariffs on the importation of stuff from Canada. So it does seem like it's going to give money to bring the mining to production, and then have to pay tariffs on the import of the material that it's helped bring to market.
Potentially, yeah, but I don't think there's any tariffs on Canadian tungsten at the moment. I think if anyone was producing tungsten right now, I think the Americans would be doing a kind of deal they've just done with MP Materials, as in promising to buy it at least twice the current spot price.
Now, before we jump down that rabbit hole, Neil, we perhaps better draw a line under today's conversation. Neil Adshead, thank you very much for joining us today.
No problem. Thank you, Paul. Always a pleasure.
And if you like what you see, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.